Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and basically what we are doing the banking awareness. Alright, we have covered several topics like the banking history, banking evolution, types of banks, PFRDA, IRDAI and so many other bodies, right? In the previous lectures, basically we had started with the EXIM, okay, which stands for Export and Import Bank of India, right? We had started this part. We had discussed about the importance of international trade, okay, why it is important, and we had covered the overview and the history of Exim Bank. Okay, like during the 1980s when the India was opening up, because we had discussed that prior to the independence there was a private players, then after the independence there will be public participation, okay, and thereafter again the privates were introduced. This scale we had discussed in the previous lecture. Okay, like during the 1949, 1969 and 1980s, maximum financial institutions, and this time period also maximum bodies, okay, like 1932, this was a time when the first Indian Airlines was established, okay, and it was nearly about 1953 and all when the first airline was nationalized by the Indian government. Okay, so not only this nationalization was limited to the financial and the banking institutions, but also other significant institution of the Indian economy. Okay, but thereafter we had discussed that due to the various reasons like the corruption, like the mismanagement, okay, and like a lack of competition, many bodies which were nationalized or which were publicized by the privates, okay, were not performing as they were expected. Got it? That's why in 1991 finally the India decided that we will launch the new economic policy, okay, and we will reduce the control of government on the various organizations. Okay, we will invite the private players not only of our country but also from the outside the country, right? And during this time period in the 1980s we had realized the need for the promotion of import and export, okay, and as a result 1981 and thereafter 1982, two main events happen here. In 1981, Exim Act was passed, and in 1982, Exim was established. Okay, so this is some kind of overview of the previous discussion which we had finished in the previous lecture. I hope that you have revised that lecture before you have come for this lecture. If you are doing so, you will be benefited a lot, but if you are not doing, then as I have warned you earlier that it will be harmful for you. Okay, so after completed the overview section, now we have to deal with the objectives. Okay, like somewhat objectives we had discussed in the previous lecture, that we have to you can say promote the export and import. That's why we had established a body, but in detail when we talk about the objectives, it was not only limited with the picture of export and import, it is much more than. Okay, so let's see. So first basic objective was promotion of India's international trade. Okay, the Export-Import Bank of India, or in short we call it as a Exim Bank, has a primary objective to promote and facilitate India's international trade activities. Okay, like in the previous lecture I had given you an example. If there are several countries. Okay, all right. So as we had discussed that these countries will not have all the resources with themselves. Okay, it means that they have to acquire resources from outside. Okay, but in exchange has to give access to others also. Okay, it means that if A is acquiring the resources from D, similarly A have to give the access to D to acquire the resources from. Okay, and that's how the system works. Okay, like this. So this is the type which we had discussed. Similar thing happened with India. Okay, although India is you can say very prosperous in some kind of natural resources, in some kind of you can say important resources, but not in all resources. Okay, like we do not have a sufficient resources to manufacture the semiconductors in our country. The semiconductors are very important in the electrical items, okay, on the digital items, so we could not process it. So that's why what we have to do, we have to acquire it from the Taiwan mainly. Okay, and in response of it we have to supply some things to Taiwan. Okay, so this is some kind of international trade. To facilitate this kind of activities, the Exim Bank was established. Okay, it plays a pivotal role in assisting Indian companies, especially the exporters and importers, in expanding their global footprint by facilitating international trade transactions. All right, because it is working as a mediator. Okay, so it's basically not only providing the money. It means that you want to export and import, take that money, do whatever you want to do. Not that. Basically, it having the responsibility to assist the players. Okay, it means that if some companies wanted to be involved in the export and the import part, then not only providing the finance is their main aim, but also assist them how to use that particular financial resources in order to gain and optimize the maximum benefits. Okay, so their expansion in the global footprint has to be supervised and guided by the Exim Bank. Okay, thereafter, financial assistance. Okay, second objective. First, we have seen it is required to you can say promote the international trade, but how they will promote the international trade? So for this, basically we have the financial assistance, and the first is the export finance. Okay, this involves extending credit to the Indian exporters to meet their working capital requirements, finance export orders, manage the financial aspects of the exporting. Okay, so here you can see the word which is known as the working capital. Okay, in the previous lectures when we were discussing about the banks and all the things, okay, basically we had discussed about the word called the capital, right? So now just do a little bit revision. So what do you mean by the capital? Basically, capital is basically the asset, okay, may be available in monetary or non-monetary form. Okay, that's what we had discussed. All right, and in capital there are so many types. Okay, like the initial capital. Okay, like you can say the authorized capital. Okay, thereafter the primary capital. Okay, the secondary capital and the working capital and many more. Okay, but right now we have to just revise them. Already we had discussed them in the previous lectures. So basically, if we talk about the initial capital, so it refers to the money invested during the starting of the business or commencement of the business. Okay, like in the case of Exim Bank, 500 millions were provided to it. 50 million, sorry. 50 millions were provided to it to start the business. So that was its initial capital. Got it? Thereafter, authorized capital, what do you mean by it? Basically, the term authorized capital stands for the authorization of capital. Okay, like suppose if this is a company called the XYZ, okay, they have 100 crores capital or 100 crores as a word. So 100 crores is the capital. Okay, so how many of it has been acquired as per the detailed rules and regulations? That will be the authorized one, and the remaining will be unauthorized capital, and which will be subjected to some regulatory action by the regulation authorities. Okay, remember this thing. Thereafter, the primary capital. Now, this is an important concept. The primary and the secondary capital is an important concepts. Okay, so let's revise them in a proper manner. First is our primary capital. Okay, second one is our secondary capital. That's what we had discussed. Okay, primary capital is published capital. Okay, this is the reserve capital. Okay, this is known to public or outsiders. This is not known to public and outsiders. Okay, so if we talk about it, basically the primary capital is the published capital. Okay, like suppose if this is an organization XYZ. Okay, so whenever you will search about its financial health and all the things, so they disclose their capital, like how much they possessed. Okay, so suppose they said that right now they having 2000 crores. Okay, worth or net worth you can say. So it is a capital. It is published, available in the public domain, so it is known to the outsiders or the public. But secondary capital is a reserve capital. It is a capital which has been reserved by its stakeholders to meet the unforeseen circumstances. Okay, and that is not released to the public. So that's why it is not known to the public and the outsiders. Okay, suppose on paper they show that they having 2000 crores primary capital, but after including the results, they're totally having 4000 crores with them. It means that only 2000 crores is known to the people, but the remaining 2000 crores has been reserved as the secondary capital. Okay, and generally it has been reserved by stakeholders and not published to the public, so that this could be implemented into the working operations whenever required. Okay, thereafter the remaining is a working capital. Working capital is the you can say capital requirement to meet the daily expenses. Okay, so this is the working capital requirements. Exporters working capital requirement, and about it we will discuss in the pre-shipment and post-shipment. Okay, in detail. So finance export orders manage financial experts and the exportees. Thereafter import finance. Exim banks provide financial assistance to Indian importers to help them source goods and services from international markets. Now, this is a, you can say, some kind of question to us, like if we go by our you can say yesterday's discussion, not yesterday, sorry, previous lectures discussion. Okay, so export, import. Okay, so basically export is positive, it's inflow because it's selling. Import is negative, it's outflow, it is buying. So if we go by this particular definition, then we will see that export is in our favor. If you regularly watch TV news and if you follow the current affairs, mostly time you have seen that India should increase its export so that our inflow will increase, our selling will increase, our positive aspect of the economy will increase. Okay, this kind of slogans and this kind of lines you have seen in the media. Then why we are promoting the import part? Why the bank has been named as an Exim bank, export import? Why not only Export Bank of India? That's the reason. Okay, so if you ask this question to yourself, then you have to go back to the 1991, which is known as the New Economic Policy. Okay, and thereafter there is also a one concept which we call as a limited resources. Okay, so let's start. Basically in 1991 there was upliftment of restrictions from imports. Okay, like prior to the new economic policy there was some kind of restrictions which have been imposed on the imports, like no one could import the better technology, the better quantity from the outside players without their permission of the government bodies. So that was some kind of, you can say, hurdle. All right, but in 1991 we passed an orders and we said there is an upliftment of the restrictions. It means that you could import the better technology, you could import the quantity and all. Why? Because there is a limited resources. Okay, suppose to compete on the global stage you required a technology, you required a efficient measures and manners, where this is a software, this is a hardware, all right, whatever you can say, but that particular technology is not available in your country. So what you can do, you have to acquire it from the outside, and whenever you have to acquire it from outside you are basically doing buying, and buying, it means outflow. You have to give the money outside, and this is the negative aspect. Okay, so that's why, that's the main reason. Although it is a negative aspect, although it is an outflow, but we have to do the buyings because we have to acquire the technology, whether in the hardware or the software form, which is not available with ourselves but is available with the outsiders. Okay, and in order to make ourselves capable enough to compete at the global stage, we require that particular technology. Okay, so that's why besides export, imports are to be very, very importantly financed by the Exim Bank. Got it? Project finance. So basically it offers financing for overseas projects undertaken by the Indian companies, which can include infrastructure development, manufacturing and the service projects. Okay, it means that suppose overseas projects are basically the part of export. Okay, it may be export of goods and services. For example, suppose this is in particular country, we can call it India. Okay, do not go by the map, I'm just giving example, and this is another particular country. Okay, So there is a manufacturer in our country which want entry in that particular market, but this particular country states that we do not want the goods and services to be supplied by you. We want you to establish your factory here, okay, so that our people will get employment and also you will get the access to our market, because there is something to get and something to return. Okay, this is the chain. So that's why they nodded head, yes, okay, we will do. They go there, establish their factory. So when they establish their factory, they required a capital, and this capital is basically financed by the Exim Bank, because it is also a part of the export. Okay, they are not exporting them from the country, but because this particular person having its domicile origin in the Indian country, that's why this is liable to share its income in the Indian economy. Okay, so that's how this is an export project. Got it? Now pre-shipment and the post-shipment credit. Now this is very important. Exim Bank extend credit to the exporters both before and after shipment of goods to ensure smooth export operations. Okay, this is, as I promised, this is something which we require to be learned of. Alright, suppose this is Mr. A. This is an Indian manufacturer. This is Mr. B. Okay, suppose this is an Russian buyer. Okay, so that person provided orders to the Indian manufacturer for some pharmaceuticals products. Okay, so when the Indian person or this Mr. A will receive the order from Mr. B, who is a Russian, then what will happen? He required capital to manufacture the product, like to purchase the raw material, like to processing for it, like to arranging the labor and all the other taxes and payments. He required a capital. Okay, so basically here the Exim Bank comes in the picture and provided the money to him, okay, for the manufacturing of the item. And this is what we call as a pre-shipment, because right now the goods has not been sent to Mr. B. They haven't been manufactured yet. So that's why this is called the pre-shipment. Okay, it means that before shipping the goods, the credit has been provided to Mr. A. Alright, and this is mainly having up to 270 days. Okay, up to 270 days the credit has been provided to A, but there is a one condition which is provided, that A has to show the confirmed order, okay, from the B. A could not say that B was telling that they will buy a certain thing from. This is not the way. They have to show the certain document. Okay, like we had signed a deal with B. B says we required 1,000 units of that particular pharmaceutical product, so that's why we required money so that we could purchase it or we could manufacture it. Okay, this is called the pre-shipment. All right, up to 270 days of credit has been provided by the Exim Bank, or could be provided by, basically. Thereafter, second is the post-shipment. Okay, post-shipment is basically gives till the realization of exports. Okay, suppose Mr. A has manufactured the thing and thereafter send it off to B. Okay, this shipment will take some time. It is not like he said, okay, just look, I have put it the quantity in the ship and this will reach you in 2 and 3 days and please UPI me the payment. This is not the way. Okay, what will happen? The ship will take the product from him, thereafter do a journey, then reach Mr. B. Time taking process. Okay, and even thereafter, because Russians use the rubles, Indian uses the Indian rupee. Okay, so there will be a converted rubles will be converted into the Indian rupees so that Mr. A will receive its payment. So this is a time taking issue. Got it? But after sorry, not after, till receiving of the payment of the export which he has made, he required of money so that he could finance its working capital requirements. Okay, so that's why it is known as the post shipment. The Exim Banks gives him the money so that he could carry on his operations on the regular basis till he received the export money from B. Okay, so this is what we call as a pre-shipment and the post-shipment credit. Okay, buyer's credit facilities to foreign buyers of Indian goods and services promoting Indian exports, because they get easily loans so that they could attract it towards the Indian exports. Okay, overseas investment finance. Exim Bank supports Indian companies in making overseas investment, encouraging their global expansion and all. Okay, thereafter, trade promotion and facilitation. Exim Bank actively promotes trade by offering information, guidance and market intelligence to Indian exporters and importers, because it is not only financing them but also assisting them. Got it? Facilitates trade negotiations, trade agreements and market access for the Indian businesses, helping them to explore the new international market and trade opportunities. Okay. Thereafter, Exim Bank plays a role in attracting foreign investment into India, which is critical for economic growth, because it will take the inflow of the foreign currency, which is a part of forex and which could be used for balance of the exports, payment of the exports, sorry. Okay, suppose foreign investors in understanding the investment climate in India, identifying investment opportunities and assisting with the investment process. Okay, thereafter, the capacity building. Exim Bank is involved in capacity building initiatives to equip Indian businesses with the skills and knowledge needed to compete in the international markets, provides training, workshops and educational programs to enhance the export capabilities of the Indian companies. By promoting the international trade, Exim Bank contributes significantly to fostering economic growth in India, okay, because the international trade is a benchmark of the economic growth. Export growth leads to increased production, job creation and foreign exchange earnings, which in turn boost the overall economic development of the country. Okay, so students, basically in this lecture we have finished the objectives of the Exim Bank. I hope these things are clear to you. You have understood them well. Okay, so please revise the facts and figures which we have discussed in this lecture before you have come for another lecture. With this note, let's end this lecture, and what we say thank you.